Hey everyone, good morning. This is Frank with your Pivot Boss pre-market report for August 21st, 2015. Here's a look at the daily time frame of the ES. We've had a significant sell-off over the last 4 sessions, 3.5 sessions so far, and price basically failed to hold above the previous week's high, and that was Tuesday morning. And during that pre-market report, I mentioned that failure up there implied a likely reversal across the range into the previous week's low. I mentioned that was a far way to go, but that it's likely that it could happen. And you see that not only did it reach the previous week's low, it blew through it and dropped into 2008.75 here this morning. Now that's a big time move right now that we've seen, and you can see that I've already marked a developing key level at that zone, a key range. And that's very important. You have the high here, 2103.75. You have the low this morning, 2008.75. And then you have the center point of the range, which is 2056 quarter. That is right in line with our 2056 half key level and that CLVN right there. This is very, very important. This is a developing key range now, very similar to the key range that I mentioned before in the NQ. And the idea here is if this low holds, 2008 holds, as I suspect it may, given the rejection below this zone, the implication is that we'll see a bounce right back into 2056 quarter to solidify this key range. Upon that bounce, you're likely going to see bears come in and defend for a shot at seeing a retest of those lows and perhaps new lows ahead. So we're going to watch this key range very closely. I would say that if price can settle above 21 half this session, we could be looking at a surefire bounce into 2056 quarter ahead. But this key range is not set in stone. It all depends on if this low can remain intact. So we're going to continue to watch that as we move forward. If price can't hold above that 2021 half and close above that zone, the next key support level below is going to be 1957 half. That's the next major key level below. We also have a minor CLVN at 1998.75. But this is very important because as I mentioned before, this large range up here could be a distribution range. And if we're going to break this thing to the downside, that means we could be looking at a significant markdown ahead, likely into 1790.75, which is the bottom of the previous key range. Remember, what I mentioned before was this 2053 was very, very important here. That's the top of the prior key range. 1921.75 is the midpoint, and 1790 is the bottom. Price was trying to hold and establish acceptance above the top of this key range. Failure to do so would indicate a move across the range into the midpoint and then again to the bottom of the range. So we could be looking at a sell-off all the way into 1790 in the months ahead. So this could be very, very, very significant. So we're going to continue to watch this very closely. So if we take a look at the intraday time frame, here is how the overnight action played out. Remember, yesterday evening I mentioned to watch how price plays out in overnight trading. Immediately, as soon as price opened up, it went offered through the close and sold off significantly. And from there, price made a low, came back, made a lower high, and then boom, made a higher low and bounced to a new high. That is a signature of some type of bullish defense there. And if price can come down and continue to defend, we could be looking again at a reversal back into 2056 quarter here over the next couple of sessions. But again, it all kind of depends on this 2021 half. Failure to hold above that zone would suggest a continuation to the downside. And again, our next downside key levels would be much, much lower. So if you're looking at this on an intraday perspective, watch 2030. 2030 is where bears are positioned. Bears want to defend this level for a continuation lower. Bulls want to squeeze through that level and retest 2046 half and 2056 quarter. All right, let's take a look here at crude oil now. Here's crude oil. It's looked the same for quite some time, just a downtrending market, significantly downtrending market here. Price is currently holding on the 50% monthly expansion level, and that's important. Right now, all prices below that level have been bid, and if price can continue to hold that zone, the expectation is we see it bounce back to composite V pocket 43.13. Now keep in mind, every bounce in this uptrend has been a selling opportunity for new lows. That's just what's happened. Every bounce has been an opportunity to sell. So even if we do bounce higher, look for bears to defend at 43.13 for a shot at seeing new lows into those downside targets that we specified before, which are currently 39.85 and 38.97. All right, if we look at the intraday time frame for crude oil, you can see a nice little range forming at lows. This is important. This range right here, 41.81, that's where bears are positioned right now. That's the previous session's high. So right here, this 41.81 zone is where bears want to position themselves. If price bounces into that area, bears want to defend for a shot at new lows. Conversely, you got the other side here at about 40.65. That's where bulls are trying to defend for a shot at returning this thing up to 41.80 and then a shot at seeing expansion back up. Keep in mind, the previous week's low has been our level to defend for some time, and bears basically defended just shy of that zone. So if price does rally up, this could be an additional level for bears to defend for a move lower. So right now, given the recent move, we could see a trading range market in crude oil, and basically you're looking to fade the edges. Bulls want to be on the downside, and bears want to be on the top side. So continue to watch that zone very closely. All right, if we take a look at the NQ now. The NQ, similar to the ES, had a significant move. This is all based off of our key range. This is very important. Our key levels in the NQ have been textbook. It's been something to study. It's going to be a perfect case study to go back and see how I did this. You see right here on that 43.31, we saw a massive squeeze up. And then right here, pre-market, I mentioned that that could be the high, 46.86. And if that's the high on that session, then we would likely see a return to 45.08, and we saw it. And that's very similar to the analysis that I'm providing here for the ES this morning. Additionally, bulls were defending 45.08 for some time, but we couldn't see any action to the upside. Bulls were not getting paid. And if that was the case, we were likely going to see a slide back to the bottom of the range, and that's where we are right now, 43.30. That's why I mentioned the next support level down would be 43.30, and we got it this morning. And that's also the previous month's low. So this is very, very important here, the way this thing is played out. It's basically up, and then they ran the stops all the way back down. So if this thing's going to continue to hold as a bullish market here, I think the bulls need to come in and defend 43.30 very strongly. If not, we could be looking at further weakness into 42.43, and perhaps all the way down into the next key area of support, which is 39.98. Very similar to the ES here. So let's take a look at a little wider view here, the NQ. On a wider basis, you can see that key range. Let's drop some of these expansion marks right there. All right. The other thing here, if you take a look at a wider view, one thing of note is this key range right here, 36.66 half to 43.30 half, and then you have the midpoint at 39.98. So if you take this top of this range out, you can see this entire trading this year from February on has been attempting to hold above the key range from the previous end of year, right? And that's where we are right now. Bulls have been defending that zone time and time again, yet they really haven't been getting paid. So we could see a bounce back up, but if not, this thing is going to leak right into 39.98 with a shot to see 36.66 half. So that's what could happen here if price cannot hold above that 43.30 zone, because it would be a failure to hold above the top of the key range. Anytime you fail to hold above the top of the range, that implies a move across the range. So the long-term downside target could be 36.66 half over the course of the fall if price can't hold this 43.30. Bulls really need to defend the CLVN at 43.30 for a shot at returning this thing to 45.51, which is MCVPOC. So if we drop into the intraday time frame, you can see right here, this is how it's looking. The previous session's close is 43.64. Bears are defending that area. It's very important because if bears can't defend that zone, you're likely going to see a squeeze all the way back up to 44.31, which is the previous week's low. And that's what we're looking for here to see how this thing plays out. Right now, bears are defending this area for downside moves into the ADR targets, which are currently 43.13 and 42.95. So that's the direction we're headed right now. So if bears are looking to defend this area for downside targets at 43.13 and 42.95, likewise, bulls are still defending 43.30 for a shot at squeezing through 43.64 and into the upside ADR targets, which are going to be 43.83, and 44.02. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck, trade well, and happy Friday.